Hello everybody, hope you all are doing really well. Please confirm me on the chat box if I am audible and visible clearly or not. I'll also see it on my device. Please confirm me on the chat box if I am audible and visible clearly or not. Hello everybody, hope you all are doing really. Yes, very good evening. Yes, very good evening. Perfect. Okay, great. Thank you. Yes, thank you. So very good evening everybody, hope you all are doing really well. My name is CA Supreet Agrawal and I'm your faculty for ACCA and USCMA, and at HCCA I teach you AA, AAA and law. My dear friends, when we talk about the AAA subject and AA subject, what is more important for all of us to understand is that audit procedure becomes one of the most important chapters for both the subjects. And today we are here to discuss about the question solving of chapter number 24 and chapter number 25, and we will be solving it completely today. Now when we discuss about chapter number 24, it is on external confirmations, receivables and sales. Okay, so when I talk about the Cambridge company, Cambridge is a wholesaler of spare parts for motor vehicles to a large number of retail stores. Details of trade receivables at the end of the reporting period were as follows. Okay, so when we talk about the numbers, nil balances are 600, which is 9.1% of this. Then credit balances are in number 50, percentage is pointed, value is 120 negative. Okay, so all of this data is given for the trade receivables. Okay, this data is given for the trade receivables. Okay. Sir, if we total this, will this be 100%? Yes, but still you can check it if you want. No worries on that. Sir, if we total this, will this value match? Yes. If we total this, will it match? Yes. Right, so this is important. Now when we discuss about the questions, what are the questions? Let's study about it. Define the term stratification and explain how stratification affects audit sampling for a test of details. Now this is not related to the audit evidences, this is related to audit sampling, but this question is merged. So define the term stratification. We have discussed about the stratified population. Please explain that in one line. Then explain how stratification affects audit sampling for a test of details. So stratification ensures that we only encounter the right population. We select the samples which do not require any replacement because of any understanding issues. It helps us refine the better samples and helps us to complete a test of details in a timely manner, right? All of these pointers you can write over here. Then state the objectives of direct confirmation of accounts receivable. What are the objectives? So very important question is what you are trying to test over here. What are you trying to test over here? So are you trying to test the existence assertion or the valuation assertion? So via direct confirmation, what you are trying to achieve is the existence, not the valuation. And this is the biggest myth a lot of students have. They understand it like we are evaluating the valuation, we are verifying the valuation by obtaining the external confirmation, which is not true. What you are trying to achieve is the existence. That is very important. Okay, then explain the following terms: positive confirmation and negative confirmation. So positive confirmation is when the value has been mentioned and what we have done is that is open and close, right? Value has been mentioned is open, value has not been mentioned, value has not been mentioned is open, value has been mentioned is closed. Now when we talk about the positive and negative, so positive you have to respond even if you agree, even if you don't agree. When we talk about the negative, you have to respond only when you do not agree, right? So these two are important. Now explain how the following might be selected for direct confirmation: balances over $50,000 and balances between $1 and $1,000. Let's see over here. It's 189. Yes, 186. Yes, so how the balances, how the samples might be selected for direct confirmation for balances over $50,000 and for balances between $1 and $1,000. Okay, so see, if we have to select these items, so these might be called as key items and we can select all of these items. But when we talk about here, we have to stratify the population, we have to apply the sampling methods, and then we have to select certain number of samples based on materiality. Okay, now briefly describe what is meant by the term statistical sampling and how this differs from judgmental sampling. So statistical sampling, when we use two things, one is a random selection of samples and use of probability theory to select the samples. This we have covered in the audit sampling chapter also. And what are judgmental sampling, where you do not use the statistical method. It could happen in case of block selection, it could happen in case of haphazard selection, right? So please take 2 to 3 minutes, draft your answer for this one. We have already discussed about a lot of pointers. Please take 2 to 5 minutes. Please draft your answer, then let me know once it's done, and then we will be going ahead and reading the answers that are given over here, just to ensure that yes, what we have understood is appropriate and what additions we could make to our answers. Yes, so please take 2 to 3 minutes. We will be discussing it after that. Yes. Yes, I hope it's done. So let's discuss about it. So stratification, like we have discussed, is the process of dividing a population into subpopulations, each of which is a group of sampling units with similar characteristics from which the samples could be drawn. The objective of stratification is to reduce the variability of items within each stratum and therefore allow sample size to be reduced without increasing the sampling risk. What is the sampling risk? Sampling risk is the risk that the conclusion that has been derived by verifying the samples and the conclusion that would have been derived by verifying the entire population could be different. Now the population for a test of details is often stratified by monetary amount. This allows greater audit effort to be directed to the larger value items, as these items have the greatest risk of overstatement also, like what we have discussed in this part also, that for items above a threshold we can select 100% of the items. Now objectives of direct confirmation of accounts receivable, like we have discussed, the assertion tested are majorly existence and then completeness, accuracy, not valuation. This is important. A lot of student feels that via verifying the external confirmation, what we are trying to test is valuation, but we are not trying to test the valuation, we are trying to test the existence. To provide additional evidence regarding the operating effectiveness of the systems of internal control and to check the accuracy of cutoff and responses, may also draw attention to irregularities also here. This is very, very important for all of us to understand. Now after this, methods of confirmation. So for positive confirmation, a letter is sent to customers asking them to reply stating that they either agree or disagree with the balances stated. This method is preferred when there is a high risk of material misstatement. In case of weaker internal control, suspicion of irregularity of fraud also, and numerous bookkeeping errors also. But in case of negative, you only obtain the confirmation or you only ask them to respond when they do not agree. So a letter is sent to customers asking them to reply only if they do not agree with the balance as stated or if they disagree. Now selecting a sample, balances over $50,000. So there are 35 balances over $50,000 representing 50.3% in value of trade receivables. The number of these balances selected would depend on the materiality level in the accounts as a whole. If balances of $50,000 and over are material to the accounts, it is possible that 100% testing of these balances would be carried out. Now balances between $1 and $1,000. So there are 5120 balances between $1 and $1,000 representing 33.4% in value of trade receivables. Once a sample size has been calculated, the selection from these balances should be on a representative basis, like we have discussed. Now when we talk about statistical versus judgmental sampling, so statistical sampling is a method of sample design, selection and evaluation which has a mathematical base such that audit conclusion can be drawn with a specific level of confidence. But when we talk about judgmental sampling, it is a non-statistical sampling and it is generally done using haphazard selection, or it can also be done using the block selection. With this, we have completed question number 1. Now let us jump to question number 2. Sir, is this question important? Yes, this question is also important. One of my students wanted to skip this particular question, but I have specifically requested him not to skip this particular question because this is very, very important. Now let's discuss about it. Tinkerbell Company. Introduction. Tinkerbell Company is a manufacturer of children's building block toys. They have been trading for over 35 years and they sell to a wide variety of customers, including large and small toy retailers across the country. The company has a large manufacturing plant, 4 large warehouses and a head office. Okay. Upon manufacture, the toys are stored in one of the warehouses until they are dispatched to customers. The company does not have an internal audit department. Okay. Sales, ordering goods, dispatched and invoicing is there. The details are mentioned over here. Each customer has a unique customer account number and this is used to enter sales records, sales orders when they are received in writing from customers. The orders are entered by an order clerk and the system automatically checks that the goods are available or not and that the order will not take the customer over their credit limit. Okay. For new customers, a sales manager completes a credit application also. This is checked through a credit agency and a credit limit entered into system by the credit controller also. So you cannot give more than that credit. The company has a price list which is updated twice a year also. Okay, good. Larger customers are entitled to a discount. This is agreed by the sales director and set up within the customer master file also. Good procedure. Looks like good procedures are there. Once the order is entered, an acceptance is automatically sent to the customer by mail, email confirming the goods order and unlikely dispatch date also. The order is then sorted by address of customer. The warehouse closest to the customer receives the order electronically and a dispatch list and sequentially numbered goods dispatch notes are automatically generated. The warehouse team pack the goods from the dispatch list and before they are sent out, a second member of the team double checks the dispatch list to the GDN which accompanies the goods delivery note, as in GDN as in goods delivery note. Once dispatched, a copy of the GDN is sent to the accounts team at head office and a sequentially numbered sales invoice is raised and checked to the GDN. Periodically, a computer sequence check is performed for any missing sales invoice numbers. Now, fraud. During this year, a material fraud was uncovered. It involved cash or check receipts from customers being diverted into employees' personal accounts. Oh my God, very big fraud. In order to cover up the fraud, receipts from subsequent unrelated customers would then be recorded against the earlier outstanding receivables. Oh my God. And this cycle of fraud would continue. Okay. The fraud occurred because 2 members of staff who were related collusion of employees. One processed cash receipts and prepared the weekly bank reconciliation. The other employee recorded customer receipts in the list of individual customers. An unrelated sales clerk was supposed to send out monthly customer statements, but this was not performed. The bank reconciliations each had a small unreconciled amount, but no one reviewed the reconciliations after they were prepared. The fraud was only uncovered when the two employees went on holiday at the same time, and it was discovered that cash receipts from different customers were being applied to older receivable balances to hide the earlier sums stolen. Now required. Recommend 6 tests of controls the auditor would normally carry out on the sales system of the Tinkerbell company and explain the objective of each test. See, 6 TOCs. Number 1 point is TOC, not TOD. And number 2 point is on the sales system, not on every system, only on the sales system. That is the first information. Second question is, describe substantive procedures the auditor should perform to confirm Tinkerbell's year-end receivable balances. To confirm year-end receivable balance. And only substantive procedures, not the TOCs. Third question is, identify and explain controls Tinkerbell company should implement to reduce the risk of fraud occurring again. And for each control, describe how it would mitigate the risk. Control and describe how it would mitigate the risk. Then describe substantive procedures the auditor should perform to confirm Tinkerbell company's revenue. Substantive procedure for the revenue part. Okay, this is a very big question, a 30-mark question, but please solve it. Now I would suggest that we go one by one because the questions are clearly bifurcated. So please read the first question again, read the information again, then we will be discussing in another 2 to 3 minutes the answer for that. Just have a rough draft of it. Recommend 6 tests of controls the auditor would normally carry out on the sales system of Tinkerbell company and explain the objective of each test. TOCs on sales system with the objective of each test. That's it. Let's solve within 5 minutes, then we will move further. Yes, I hope this was sufficient time. So now let's discuss about it. The question was 6 test of controls from the sales system and the objective of each test, right? So let's go back to this particular paragraph which explains the sales system, and let's try to discuss what all test of controls should be applicable and what are the objectives of it. So each customer has a unique customer account number, and this is used to enter sales orders when they are received in writing from customers. So the first control that we should apply should be here only, that we will be entering a fictitious customer number and we will see whether the system accepts it or reject it. It should reject because it is not in the list, right? What the objective of the test is just to ensure that whether all the approved customers are only there in the system or not, and if there would be any new customer, will the system reject that particular order or not. Now the orders are entered by an order clerk and the system automatically checks that the goods are available and that the order will not take the customer over their credit limit. Now the second control would be here, which is what? We will try to order some product which is not available and we will see whether the system rejects it or not. Okay. The reason of this particular process, the reason of this particular control, the objective of this particular control is to ensure that only the orders are received only for those goods which are available. Okay. Now, third thing is we will try to ensure by performing a test of control an order for a legitimate customer over their credit limit. Say the credit limit for Supreet Agrawal is $10,000. We will place an order for $11,000 and we will see whether the system rejects it or not. The objective is plain and simple. We want to ensure that whether any customer is allowed to place an order above their approved threshold. Okay. Now for new customers, a sales manager completes a credit application. This is checked through a credit agency and a credit limit entered into the system by the credit controller. Now we will take certain samples, we will inspect them, that the credit rating that has been given by the agency and the credit rating that is fixed in the system, whether that matches or not. Okay, that is first thing. Now the company has a price list which is updated twice a year. So for this we will input another control, and the control would be we will check certain invoices within a period and we will see whether the amount charged in the invoice matches with the price list of that particular year, specifically immediately after the revision. Okay, the objective is to ensure whether the right price is charged or not. Then larger customers are entitled to a discount. This is agreed by the sales director and set up within the customer master file. So we will also perform a test of control on recalculation of the discounts as well as the approval of the discount. For approval, we will check whether it has been discussed with the sales director or not, and for the recalculation, we will check that whether the system calculation done and the manual calculation done by us matches or not. So this should be the overall procedure that we perform. Okay. Okay. So sir, this was of 12 marks. So you should divide it into 6 plus 6 marks, 6 test of controls and 6 objectives. Now describe substantive procedure the author should perform to confirm Tinkerbell's year-end receivable balances. So for the year-end receivable balances, this particular paragraph is more important, right? So please go through this one. Try to mention the substantive procedure that are relevant for the year-end receivable balances. Take 2 to 3 minutes, have a draft answer with you, not the full answer, the draft answer with you, then we shall discuss about it. Yes. Yes, I hope this was sufficient time. So my dear friends, when we discuss about this particular question, please try to understand that it is asking you for a plain and simple year-end receivable balance, right? So what you have to do is you have to follow the similar approach that we have discussed during the strategy session also. What we have discussed is you have to cover all the assertions and you have to cover all the procedures. So for example, existence and occurrence. How will you check existence and occurrence? You will obtain the confirmation, right? How will you ensure that there is completeness? So what you will do is you will review the data, you will inspect the receivable balances against the credit sales balances and you will see whether it matches or not. You will also inspect and re-perform the movement of the trade receivable balances, whether the opening and the movement to closure matches or not, right? Then the third thing that is very important, which is valuation. You know, a lot of people write that we will be testing or we will be obtaining confirmation to test the valuation assertion. That is not right. So how will you test the valuation then? So one thing is the movement balance, another one could be the inspection of individual balances, whether the credit sales amount and whether the trade receivable balance that has been transferred after any provisioning if it is required, after any discount that has been required, or after any credit note that is required, whether that matches particularly or not. That is very important, right? So you will inspect and review. Okay, how will you ensure the cutoff? So you will test first four items and first five items and last five items to ensure that whether the trade receivables are booked at the right accounting year or not. That is important. How will you ensure presentation and disclosure? So you will check whether all the relevant disclosures have been given as per the relevant standards or not, as per the relevant guidances or not, and you will also review whether the amounts are shown at the appropriate places in the financial statements or not. So all of these things are very, very important. Now let's go and read what all points they have written. So perform, also there would be aging analysis, right? All of these things would be there. Now perform a positive confirmation request of a representative sample. So confirmation is there. Review the after date cash receipts, subsequent receipts. Calculate average receivable days that we discuss in ratio analysis in FR. Review the reconciliation of the trade receivable like we have discussed. Select a sample of goods dispatch notes before and just after the year end, first five and last five samples. Inspect the aged receivables report to identify any slow moving balances, and if any provisioning is required, we have already covered. For any slow moving or aged balances, review customer correspondence to assess whether there are any invoices in dispute. We can also review the board minutes to discuss if there are any disputed invoices, any disputed balances. Review company board minutes to assess whether there are any material disputed receivables like we have discussed. Review a sample of post year end credit notes to identify any that relate to the pre-year end, and we also have to discuss if any adjustment is required. Review the list of individual customers for any credit balances and discuss with management whether these should be reclassified as payables if there would be any set of issue that is being identified. Select a sample of year-end receivable balances and agree back to valid supporting documentation of GDN and sales order to ensure existence. All of these things were important. Now let's come to the third point. Okay, identify. See, this is for 6 marks. Okay, identify and explain controls Tinkerbell company should implement to reduce the risk of fraud occurring again, and for each control describe how it would mitigate the risk. So 3 controls and description, 3 descriptions on how it would mitigate the risk of fraud risk in the company. So please take 2 to 3 minutes, draft your answer, then let me know once it's done. Yes, I hope it's done. Please confirm me in the chat box if it is done. Yes, please confirm me in the chat box if it is done. Okay, so the question was pretty clear. Question was, identify and explain controls Tinkerbell company should implement to reduce the risk of fraud occurring, and for each control describe how it would mitigate the risk, right? So let's discuss about it. When we discuss about this particular paragraph, we have to go line by line. During the year, a material fraud was uncovered. It involved cash or check receipts from customers being diverted into employees' personal accounts. That is, customers were paying the company, but it was being diverted to the employees' personal accounts. In order to cover up the fraud, receipts from subsequent unrelated customers would then be recorded against the earlier outstanding. Please read it again. In order to cover up the fraud, receipts from subsequent unrelated customers would then be recorded against the earlier outstanding receivable balance, and this cycle of fraud would continue. It was more like a Ponzi scheme, right? That the money was taken from one account, it was transferred to another account. The money was taken from third account, it was transferred to the secondary account. So the fraud occurred because two members of, now here comes the starting of the answer. The fraud occurred because two members of staff who were related colluded. So number one thing, see, the question is identify and explain controls. So when there is a collusion that has happened, so first control that you should put is that the process should have segregation of duty. So one processed cash receipts and prepared the weekly bank reconciliation. The other employee recorded customer receipts in the list of individual customers. Now my dear friends, here this process should be divided into multiple people. The cash receipts should not be dealt only by the one person. The cash custody should be with another person. The cash reconciliation should be with another person. The authorization in case of payment should be with another person, and the recording should be with another person. So there should be segregation of duty. Now, sir, segregation of duty, how it will resolve? So when there is a segregation of duty, there are multiple people involved in the same process. So it becomes a little more difficult for them to collude among themselves. Okay. Now, an unrelated sales clerk was supposed to send out monthly customer statements, but this was not performed. So we have to check this control, why it was not performed, why the sales clerk was not sending this. Okay, and we have to ensure that this particular control operates effectively also. How it will ensure that the fraud will not happen? So when monthly customer statements would be shared with them, so there would be lesser chances of existing any third party payment, or not to exist their own payment, the payment that has been done by them for the purpose of their account statements. Now, the bank reconciliation each had a small unreconciled amount, but no one reviewed the reconciliations after they were prepared. So there should be better controls that should be put in place for reconciliations, even if the reconciliation amounts are small, because if there could be smaller reconciliation amounts today, there could be bigger reconciliation amounts tomorrow. So what we have to ensure is that there are better reconciliation procedures that are being done. If required, we can place one specific person only for the purpose of doing the reconciliation, who should be a qualified accountant, right? Now my dear friends, please try to understand this. How will this resolve? So this will let us know the reconciliation items and the reason for that, and we can let them go right now at the earlier stage only. Now, the fraud was only uncovered when the two employees went on holiday at the same time, and it was discovered that cash receipts from different customers were being applied to older receivable balances to hide the earlier sum stolen. So there could be rotation provision that could be applicable, that every person would be rotated into different functions, so that we get to know about the functionality, whether it is being done by a specific person in their favor or it is in the company's favor. Okay, let's go and read the answer for this one. So members of staff who are related should not be permitted to work in the same department. Say two relatives of the same family, two brothers, two sisters, brother and sister should not be allowed to work. Okay, this should reduce the risk of staff colluding because they do not know each other. Cash receipts should be processed by two members of staff and not by one. We have discussed it. Monthly customer statement should be sent out promptly to all customers. We have discussed it. If customer receive regular statement, then they would be in a position to flag to Tinkerbell that there was a delay in their payments being credited to their accounts. Bank reconciliation should be reviewed by a responsible official, like we have discussed, a qualified accountant. A small unreconciled amount can actually represent two large balances which has cancelled out each other. On a regular basis, staff within the finance department should rotate duties. We have discussed about that also. If staff members know that they will be needed to rotate their roles, then they will be less inclined to commit fraudulent activities. The list of individual customers should be reconciled to the trade receivable account on a monthly basis, and these reconciliation should be reviewed by a responsible official. What is this? The list of individual customers should be reconciled to the trade receivable balances. Okay. Now this will increase the likelihood of the spotting errors in the receivable balances also, in totality also. Management should consider establishing an internal audit department also. Now this is the new point that we have not missed, but they have written, that we have not mentioned, but they have written, and this is important. As there has been a significant breakdown in controls, the mere presence of an internal audit department would help to deter employees committing fraud. Okay. Now question 3 is also completed. Let's discuss about the last part of the question now. The last part of the question. Describe substantive procedures the author should perform to confirm Tinkerbell company's revenue. Sir, is there any particular information that is given for revenue? No, right? No particular information has been given for the revenue. So you have to answer in general terms the revenue, the substantive procedure. Again, the same assertions and ICAI ORR. Please write down, then we will directly jump into the answer for this one, because we have covered it multiple times. How do you need to draft the answer for substantive procedures? Yes. Okay, I hope it's done. So let's discuss about it. When we discuss about the fourth part, that is only on the revenue, the basic procedures should be performed, right? Because there is no particular information that is given for the revenue. So compare the overall level of revenue against prior years. Obtain a schedule of sales for the year broken down into major categories of toys manufactured and see if there is any major movement from last year. Calculate the gross profit margin and compare this to prior year. Select a sample of sales invoices for larger customers and recalculate the discounts allowed. Recalculate for a sample of invoices the sales tax has been correctly applied to the sales invoice or not. Select a sample of customer orders and agree these to the dispatch notes and sales invoices. Select a sample of dispatch notes both pre and post year end and follow these through to sales invoices in the correct accounting period. Select a sample of credit notes issued after the year end and follow through to sales invoices to ensure the returns were recorded in the proper period. So with this, the basic functions have been performed, the basic audit procedures have been performed. If you require any further information, any further discussion on this particular point, you can let me know. Any particular point that you are facing trouble with, please feel free to let me know. With this, we have completed this particular chapter. Now we can jump into the next chapter, which is chapter number 25. The name of the chapter is Share Capital, Reserves and Directors Remuneration. My dear friends, there's only one question in this particular chapter, but this is an important question. So this will help us understand a lot of pointers. Okay. So let's quickly start with this particular question. We will complete it in the similar manner that we have completed this particular question, and it will be completed within 15 to 20 minutes. Now, It is 1st July 2025. Recorder Company is a large mobile phone company which operates a network of stores in countries across Europe. The company's year end is 31st July 2025. So we have discussed about it. This is 1 month prior. 1 month prior to year end. 1 month prior to year end. Now you are the audit senior of Piano and Company. Recorder Company is a new client and you are currently planning the audit with the audit manager. You have been provided with the following planning notes from the audit partner following his meeting with the finance director. Recorder Company purchases goods from a supplier in South Asia and these goods are shipped to the company's central warehouse. Okay. The goods are usually in transit for 2 weeks and the company correctly records the goods when received. Recorder Company does not undertake a year-end inventory count, does not, but carries out monthly continuous perpetual inventory counts and any errors identified are registered in the inventory system for that month. Okay. Now during the year, Recorder Company introduced a bonus based on sales for sales representative. Okay. So let me write this. This is for purchase. This information is for purchase. This is for incentive. Okay, so Recorder Company introduced a bonus based on sales for sales representatives. The bonus target was based on increasing the number of customers signing up for 24-month phone line contracts. This has been successful and revenue has increased by 15%. Good, especially in the last few months of the year. The level of receivables is considerably higher than last year. Okay, the level of receivables is considerably higher than last year. Oh my god, very big issue. And at the end it has happened, so there might be a chance that the sales representative might have fraudulently sold it, and there are concerns about the credit worthiness of some customers. Wow. So in numbers the revenue has increased but the payment might not be received. Wonderful. Now Recorder Company has a policy of revaluing its land and building and this year has updated the valuation of all land and buildings. Okay, during the year the directors have each been paid a significant bonus and they have included this within wages and salaries. The significant bonus is included within wages and salaries. Separate disclosure of the bonus is required by local legislation which they have not given. Oh my god. Now the questions are divided in 4 parts. Number 1, describe 5 audit risks and explain the auditor's response to each risk in planning the audit of Recorder Company. Very easy question, right? Second question is, explain the audit procedure you should perform in order to place reliance on the continuous perpetual count for year-end inventory. Very easy question again. Describe substantive procedure you should perform to confirm the director's bonus payments included in the financial statements. Okay, and the last question is, the finance director of Recorder Company informed the audit partner that the reason for appointing Piano and Company as auditors was that they audit other mobile phone companies including Recorder Company's main competitor. The finance director has asked how Piano and Company keeps information obtained during the audit confidential. Okay, so how do they keep the audit information confidential? Very important question. Explain how Piano and Company should ensure that this conflict of interest is properly managed. So waiver could be there, right? Proper information could be there, separate audit team could be there, and so on. Let's have a discussion on the first question first. It's the biggest question, the 10-mark question. Rest questions are of 3 to 4 marks, right? So let's have a little bit of discussion on this particular question. Describe 5 audit risks. So what you should do is, you should evaluate this particular case study. Okay, and let's discuss about what could be the audit risk. Okay, so let me give you some rough idea here. When I talk about the audit risk, so first paragraph does not tell me about any audit risk. Okay, one of the audit risk is that they do not undertake a year-end inventory count. They follow a perpetual system, because of which there could be different risks that they could follow. Then incentive has been given, but incentive has been dependent on the increasing the revenue, which has increased, but it has increased at the later part of the year. Plus considerably higher receivable balances are there. Okay, since revaluation has been done, there could be various changes in the balance sheet which might just be a result of revaluation, and legal regulation has not been complied with. These could be the major audit risk that the company might face currently. Now please take 2 to 5 minutes, draft your answer, then let me know, then we will discuss the answer for this particular one. Yes. Yes, I think this is sufficient time. So let's discuss about the answers now. Recorder is a new, and please note down that you also have to record the auditor's responses. So generally 5 points are required for audit risk and 5 points are required for auditor's responses. So can we write 1 or 2 more? Yes. Can we write 1 or 2 less? No. Recorder is a new client. So this is one of the audit risk because the team might not be familiar and detection risk would go high. Now, piano and company should ensure they have a suitably experienced team. Also, adequate time should be allocated for team members to obtain an understanding of the company. Okay. Now, reorder. So, planning should be done very thoroughly. It should not be let gone because of the lesser time available. Recorder purchases goods from South Asia which are in transit for 2 weeks at the year end. There's a risk that inventory, purchases and payables cutoff may be inaccurate because the transit period is too long. Recorder correctly accounts for goods on receipts. Therefore, at the year end, only goods which have been received into the warehouse should be included in the inventory balances and not the ones that have been either ordered or have been paid for but not received. The audit team should undertake detailed cutoff tests to ensure that. Now, recorder undertakes continuous perpetual inventory counts that we have discussed at its central warehouse. Under such a system, all inventory must be counted at least once a year with adjustment made to the inventory records. That is, once a year it should be manually counted for across the year, and we should see if there are any adjustments. If yes, we have to make those adjustments. Inventory could be under or overstated if the continuous perpetual inventory counts are not complete and the inventory records accurately updated for adjustments. So it could be understated or overstated. The completeness of the continuous inventory count should be reviewed. In addition, the level of adjustments made to the inventory should be considered to assess whether reliance on the inventory records at the year end will be acceptable. This should be the process by the auditor just to review it. Now, a sales related bonus scheme has been introduced in the year. This may lead to sales cutoff errors with employees aiming to maximize their current year bonus, right? It could happen that somebody wanted to buy next year, but they might be pressurizing them to enter in this year to buy in this year so that they will be getting their bonus. Increased sales cutoff test will be performed along with the review of any post year end cancellations also. You know, in one of my clients, I have observed that the agents actually, the checks that were being made for the next accounting period, they have actually deposited it in the current accounting period just to ensure that the sales gets recorded in this particular year, even if the services are given in the next year, just to increase the bonus. Now, receivables, although of course we have highlighted it and this was not allowed later on. Now, receivables are considerably higher than the prior year and there are concerns about the credit worthiness of some customers. This is a big audit risk. Undertake extended examinations of post year end cash receipts and see if the credit worthiness is still true or not, and if there are any changes that are required, we have to make it. One more risk related to it is there is a risk that some receivables may be overvalued as they are not recoverable because of the credit worthiness also. So we have already completed 5 points, but my dear friends, here it's a very important point to note here is that they are trying to teach you. So they have mentioned a lot of pointers. Do you need to mention all of these pointers? No, you might be missing out of 1 or 2 pointers, but they have mentioned everything. It is in fact a lot more for a 10 marks question, but still they have mentioned it. Do you need to mention all the pointers? No, you need to mention 5 pointers to the minimum. In addition, receivables could be overstated as a result of the bonus scheme. Some of the customers signed up for contracts may not actually exist because of this. Now, auditor should do what? External confirmation of receivables to confirm that customers exist and represents valid amounts are due. Now, recorder has a policy of revaluing its land and buildings, and these valuations have been updated during the year. Now, discuss with management the process for undertaking the valuation, included whether the whole class of asset was revalued or not. So this is very important. Record has a policy of revaluing it, right? Now, property, plant and equipment could be under or overvalued if the recent valuation has not been accounted for correctly. So review the disclosures of the revaluation in the financial statements as per the IFRS accounting standards. Now, last two, the directors have been each paid a significant bonus, and separate disclosure of this in the financial statements is required by local legislation, and the directors remuneration disclosure will not be complete and accurate if the bonus paid is not disclosed. So discuss with management and review the disclosure in the financial statements to ensure compliance with the local legislation also. With this, we have completed the first part, right? Now let's discuss about the other parts. When we discuss about explain the audit procedure you should perform in order to place reliance on the continuous perpetual accounts. So this is very, very simple, right? Audit procedure. So we can physically verify the inventories once a year. We can obtain an understanding of the IT system that governs the perpetual system, and we also can get the explanations from the management regarding how do they ensure that the perpetual system is accurate only. We can also have a little bit of testing between what could have been the impact if the fixed period system was followed against the perpetual system, and whether it is material or not, and whether the company actually has the basis to follow this or not, right? So this is a 3-mark question. Let's have a quick reading of the answer. So the audit team should attend at least one of the continuous perpetual inventory counts. Okay, at least one. Attend at least one. Now the audit team should confirm that all of the inventory lines have been counted or are due to be counted at least once a year, like we have discussed. Now review the adjustments made to the inventory records on a monthly basis to gain an understanding of the accuracy level also. If significant differences consistently arise, this could indicate that inventory records are not adequately maintained or the process is not being followed up appropriately. Consider attending the inventory count at the year end to undertake test counts of inventory from records to floor as well, and from floor to records as well, like we have discussed, no, from sheet to floor, from floor to sheet, that we have discussed in the audit procedures also. With this, we have completed the B part. Sir, do we need to write 5 points? No, you need to write 3 to 4 points with a little bit of detailed explanation. Now, describe substantive procedure you should perform to confirm the director's bonus payments included in the financial statements. So when we have to make sure about the bonus, one important pointer is that is it similar to the payroll balance? Is it part of the payroll, or is it different from that? If it is different from that, then we have to decide it under what area, under what item it would be displayed, whether it would be a key managerial personal related expense or it would be a normal payroll expense. Do we need to have separate disclosures for that? All of that, and whether it was approved, when it was paid, whether it was actually due or not. So obtain a schedule of the director's remuneration including the bonus paid. Okay, number 1, agree the individual bonus payment to payroll records. So what you can do is you can start with the inquiry procedure and you can end with the written representation, like we have discussed earlier only. Now confirm the amounts of each bonus paid to the bank ledger, whether it has actually been paid or not. Review the board minutes to confirm that any additional bonus payments have been agreed and approved or not. Obtain a written representation from management confirming the completeness of director's remuneration. Then review any disclosures made of the bonus and assess whether these are in compliance with the local legislations or not. Now, one of the most important questions of this particular part is this one. Explain how Piano and Company should ensure that conflict of interest is properly managed, because our client is concerned about the secrecy of their data. Even if the audit partner might not leak it, but it might happen that because of any of the technical glitches, because of any of the glitches, it might be leaked, and if it is leaked, then it would be a very big problem for our client as well, right? So how the conflict of interest is ensured. So number 1, we have discussed already that what could happen in case of this particular area is either we can have a different audit team who will not be communicating to each other as far as the professional assignments are concerned. We could take a waiver from them. So there could be a lot of areas. So both recorder and its competitor should be notified that Piano and Company would be acting as auditors for each company, like we have said, waiver form. And if necessary, consent obtained. One or both clients may be advised to seek additional independent advice if required. A safeguard would be to assign separate engagement teams to each client, like we have discussed, with different engagement partners and team members. Once an employee has worked on one audit, there should be a period of cooling off before any involvement in the audit of any competitor company. There should be clear policies and procedures for members of each engagement team on issues of security and confidentiality, whether they can disclose it or not within the firm also. This could be documented in a schedule to the audit engagement letters. Regular monitoring of the application of the above safeguard by a senior individual in Piano and Company, that is the audit firm involved in either of the audit, could be there. With this, we have completed chapter number 25 also, my dear friends. Now we will meet for the next lecture where we will be discussing about chapter number 26 and chapter number 27. And by that, we will be completing all the particular lectures on the audit procedure, and that would be our ending of this, and we will be entering into a new phase where we will be discussing about some of the NPOs, then reporting structure, then going concern, and then the question solving for all the chapters